Hey, welcome everybody. This is a watch party for two big earnings announcements for Microsoft and Meta. These are going to be huge. They should be dropping in about 4 minutes. And I'm joined by Daryl, who does great technical analysis, and I'm going to be handling the fundamental valuation part of both companies. That way, you get two different points of view on these awesome companies. So as we go through, we're going to focus on the two principal companies, but we're going to cover other ground. I know Qualcomm is dropping, and
They
Qualcomm
just they just reported
did they? So we can
beat on the top and the bottom.
we'll take a peek at it. But as soon
Okay.
as Microsoft drops,
Yep.
that's like the main course. We don't want to
Yep.
get full on the chips and salsa or maybe the other hors d'oeuvres. The main meal is going to be Microsoft and Meta. So as soon as that drops, we can go on it. So what are you hearing about Qualcomm so far?
So Qualcomm, excuse me, reported earnings of 285, beating by 14. Revenue was 10.8 billion, an increase of 16.9% year over year, and they beat by 630 million. The Q4 guidance, the revenue is in the range of 9.9 to 10.7 versus 10.61 consensus. So looks like consensus is in the higher end of that range. The non-GAAP EPS is 260 to 280 versus 282 consensus. So they're not guiding as high as the market is anticipating.
Okay. Yeah, the stock's selling off, and that's probably the guys that they're saying, hey, we're not quite
Yep,
sure.
that would be my guess. Yep,
And
I can see that it's down to 153.89 right now.
hmm yeah, interesting. So I guess companies have to really be enthusiastic and positive about the forward guidance in order to get a rally going. Now, it doesn't help is we had a down day on Wall Street. We had the Federal Reserve Chairman, out some comments that kind of shake people in their boots a little bit. I think that's a combination of things, but I think Qualcomm is priced really nicely, I think, at a discount. We can handle that after Microsoft and Meta. Um, Interesting. All right. So I'm going to get my Microsoft stuff ready here. Got their investor page open, and I think they're going to be dropping in about 1 minute. We'll see if that's the case. So we got Microsoft. It's up 6%. Did they? Here it is. So results are out. So did you get notified?
I haven't got a notification yet.
Here it is. All right. Microsoft revenue was 76.4 billion. I'm going to make this a little bigger. All right, it's a little better. So revenue was increase of 18%. Very good. They're gigantic. And their earnings per share increased 24%. So their profit was higher at a higher growth rate than their revenue. Cloud and AI is the driving force of the business transformation across every industry and sector. Okay. So they closed their fiscal year at the end of June. And so they're reporting their full fiscal year. That would be 12 months. So as we read these comments, they're going to be representing them as their full fiscal year. So productivity and business processes. Okay. So this is their software business was up 16%. The intelligent cloud, what does that include? So that was up 26%. And that is Azure. They were growing at 32. So the number keeps getting bigger. So I get that it gets harder to grow by a percentage. That is very good growth.
Yep.
And the company, excuse me, the street is rallying on that news. So that looks good. What about their CapEx? What's going on with CapEx? That's always a key number. And see if I can get there. No, yeah, here we go. Income statement looks good. Profitability expanded. Balance sheet, they got more cash. Wow. They have $94.5 billion of cash or cash equivalents. All right, here we go. So here's 12 months ended, 25th. And they also give us the quarter. Very good. So cash from operations. Wow, what a number. $136 billion from operations. In the quarter, 42.6. And
Incredible.
they're okay. And so their CapEx did expand quite a bit for the year 44 to 64 as expected. So their free cash flow is going to be 72. It's going to actually be 71.5 billion. That's huge. Huge numbers. So the market likes what they're seeing. 6% rise on a company that's worth 3.81 trillion. 6% on a number like that is $200 billion of value.
Yeah, it's amazing.
That's a lot of people clicking buy and saying, yeah, I want to invest in Microsoft. These guys are the real deal. I'd like more Microsoft. So that looks awesome. Congratulations, Microsoft. Have you noticed if Meta was released?
Let me go.
Oh my
Meta,
God,
yep. Yeah, they
Meta.
released.
They're up 8.44. Let me go out on a limb and say that they probably released some really good numbers. So we'll go through the numbers, guys, and kind of get a high level. And then if you want to get the technical analysis on both companies kind of set up, I'll pass it to you. And then while you do that, I'll do the valuations.
Okay.
All right, give me a second here. I'm just trying to, darn. So trying to get to Meta's earnings page. So give me a second here. There we go. So Meta going into this earnings, they are growing really well, but the question was, how much are they going to spend in CapEx? Is that going to be excessive? So here is their earnings. And make this a little bigger. Okay. All right. So revenue increased 22%. Now that I was hoping it'd be a little higher, like 25, but we're at 22. And net income expanded by 36%. Wow. These guys are making a lot of money. And this is for what quarter is this? Is it their second quarter? Yeah, second quarter. So DAP, family daily active people, 3.48 billion human beings access a Meta app. Increased 6% year over year. Incredible how many people touch Meta. All right, revenue was excellent. Capital expense, including principal payments of financing, were 17 billion. Okay. Cash equivalents, they got plenty of cash. They increased headcount 7% over 1 year. Okay. All right. And see if they give us some financials. So revenue was good, 22% growth for the second quarter. We know they have plenty of cash, almost no debt. And here we go. So here's where the data center and AI are showing up. 29 collectively for this month's $29.4 billion of spend on CapEx, 16.5 on for the second quarter, which was much higher than last year, where they spent 8.1. They doubled their CapEx. And the market is expecting that because they are trying to get a good portion of the AI spend. And this is up 9.28%. Explain that to me, Daryl. Let me pass this over to you. I'm not smart enough to explain why it's up so much, but maybe you are.
Well, the implied move for Meta was 6.4%.
And Daryl, it's like a screen in front of your graph. I don't know if it's.
Yeah, I put it there on purpose.
Okay. All right.
This Meta, the implied move was 6.4%. For Microsoft, it was plus or minus 4%, so they're exceeding the implied move. So Microsoft has just been on a tear ever since the tariff announcements back in April the 2nd, and the low on April the 7th, they got down to $344. And they closed today at 513.24. And in the post market, we can see that they're at 545. So they're trading above all their major averages. I actually have them priced at about 409, so they're blowing that expectation out of the water. One of my big concerns about this price run has been the decrease in momentum, and even the relative strength has been somewhat decreasing. That's usually somewhat of a yellow flag.
Take me through that again. I didn't quite understand it.
So when the price is going up,
Mm-hmm.
but you have momentum going down, even though it's positive, the momentum is positive. It is not as high as it was back on May the 12th.
Okay.
So momentum is going down. The relative strength is not as strong as it was May 12th. Yet we have these prices continually driving higher. So if I would have seen this back in late May, I mean, I would have been really concerned about this, but they're defying the odds.
Incredible.
The accumulation has been fantastic. So nobody's moving out of this stock. The cumulative money flow is definitely positive for Microsoft. Ex-dividend dad's been picking up a lot of it.
Well, there's several Microsoft investors in our community, and one of them I'm thinking of, and he's going to be very, very happy. I think it's
Mike?
No, it's Gnome.
Oh.
And I think tomorrow he may not be able to remove the smile off his face. So good for him and good for all investors in Microsoft. 6.72.
Shadow Guy is asking about the CapEx. What did you find on that?
Well, the CapEx for Microsoft expanded. It went up. So CapEx went from 44.4 billion last year to 64.5 billion this year, a $20 billion increase to an already significant number. Now, Wall Street is saying, hey, keep doing that. We want you to be a major player in the whole AI space, and understand that Microsoft's different than Meta in this respect. Microsoft's building out a lot of capacity in their data centers in order for them to sell that capacity to customers. So a customer comes along and says, I want to build this big workload. Perfect. You can do it on Azure, which is Microsoft's cloud, and then they charge that customer. So a lot of this expansion is kind of pre-bought, and they're going to be able to expand their revenues in the future. So as you see this CapEx, it's kind of going to enable Microsoft to grow in the future by a very high percentage. So that's the CapEx on Microsoft. On the Meta side, it's a different story, but the market really likes it. Meta is saying we want to be one of the big AI players. And we saw that 3.4 billion people log into a Meta app every single day. That's pretty incredible. So Meta wants to be able to present these people with their AI and say, hey, be a Meta AI user, which I think they have a huge advantage. You know how we talk about moat, we talk about network power, network effect. Meta has a massive network where they can launch their AI business. So the market likes that Meta will invest in CapEx so that Meta is assured, hey, they'll be a big player in the AI space. Meta's CapEx went from 14.5 billion. This is for the first 6 months of the year. So the first 6 months of 2024, they spent 14.5 billion. They spent pretty much more than double this year at 29.4 billion for the first 6 months. So they're spending in this space trying to get a land grab in the AI market. So you showed us Microsoft. Did you want to show Meta before we come back to my screen?
Yeah, if we look at Meta, we can see that they failed to hold this high. So they went up and touched that high and then have been trading below that since.
Mm-hmm.
Their PPO, they have been pretty much just consolidating for the last month or so, going sideways, and the momentum has been decreasing, and the RSI actually got below 50. That usually shows weak relative strength. But I was just looking at their intraday, and they are up to 761 at the moment.
And Meta, I did notice Meta's kind of had some hot streaks and some cold spells like this year. Just they came out of the gate for 2025 and just really rose quickly in value. And then everybody took a cold shower in March, April. Meta wasn't the only one.
Yep.
But then they came out of that big lull. Let me go ahead and share my screen. So Meta's been hot and cold. The beginning of the year, boy, they're red hot. Just get out of the way. We're going up. 25% increase just coming out of the year, right? Just holy smokes. Everybody hang on to your hats. Then along with everybody else, it's sold off with all the tariff concerns. It sold off by 34%. And then it picked itself up and just cranked up. But if you look at the last month, it cranked up 45%. If you look at the last month, not so much. The last month is like pretty flat. So they've been hot for two little segments. You said that they aren't able to eclipse this number, which is 736. And looking at their aftermarket,
if that holds, they're going to blow it away tomorrow.
If they can hold on to the gain, right?
Yeah, they need to be able to hold that.
Yeah. Oh man, that is one incredible rise. And just to round up 10%, 10% on 1.75 trillion, that's $170 billion of inflow. That's people saying, I want to buy Meta. to the equivalent of $170 billion. That's pretty darn incredible. Looking at the valuations, kind of going back to Microsoft for a bit, Microsoft, I felt, has been trading at a premium, and some investors may be just fine with it, especially if you bought Microsoft, 4 years ago, 10 years ago, and you're sitting at a very good cash cost basis. I don't know that I would sell it, but I am seeing that their price is so high now; it's going to be higher. It's hard to see a discount based on the numbers. When we look at, because I think it's priced about 30%, a little too high, and I'll show you what other analysts have to say. When we talk about Meta, I actually think Meta is discounted by 35%. And the reason for it is you're getting Meta for half the price. If you look at market cap, it's half the market cap, yet they drive so much cash. And the ratio to cash is better than Microsoft. You get a better PE than Microsoft. So Meta is showing that I actually, based on intrinsic value of cash flows, it is discounted by 35%. If it holds at 10% gain, it's going to be, different discount. But boy, this one's just it's gonna have a great day tomorrow. That's what analysts have to say about Meta and Microsoft. So going into the earnings, 47 analysts are covering Meta, and the most optimistic analyst has them at 935. That analyst is feeling pretty good right now at the moment. He's like, yeah, I told you guys.
There you go.
On average, the consensus was 734. The consensus is pretty good on this one. And we have one bear who's like, oh, Meta's a bunch of, smoke and mirrors, and it's only worth $50 a share. Well, I don't know if that guy is going to have a lot of credibility. So that looks really good. So it looks really good. Let's take a look at Microsoft. And Microsoft, 30 analysts cover it. A tighter price target. Look at that. Nice and tight. And the most optimistic analyst on Microsoft had them at $613 per share. I think they're going to be feeling good tonight. Telling everybody, I told you Microsoft is the real deal. And the worst case scenario isn't too bad. It's not far from its current stock price. And I'm sure these analysts are going to update their price targets with probably a little more optimism and put their price targets a little higher. Man, I was not expecting that the stocks are going to move this much in after hours. I was expecting 1-2%, especially since today was kind of a crummy day. We ended on like kind of a losing streak intraday. But Microsoft is up 8%. It is rising. Incredible. Over the 1 year, it's up 20%, but soon to be close to 30 probably. And 5 year, it's been a winner. This has just been a solid stock. And just to think, we could have picked this thing up for $354 4 months ago.
Yeah, it just keeps rising in the after hours.
All right, and then we got Meta. Year to date, 18.75, soon to be 28. The 1 year, it's up 49%, soon to be closer to 60. And yeah, even Meta, not too long ago, you could have bought it for $484. I did buy shares here. I was buying shares here, and glad I did so. So question to you, sir. So if they close tomorrow above $736, what does that mean to you? What do you expect out of the Meta stock going forward?
They would need to hold that for several days, in my opinion, to make sure that it's a true breakout. But if they can hold that for a week, then it's kind of off to the races as far as I'm concerned. It'll just keep going.
Well,
unless we have a big event that sidetracks everyone.
Yeah.
Those
Yeah.
those breakouts are usually pretty strong. I've shown you some in the past, like with Nvidia, when it
Yeah.
breaks out of a 3 or 4 month base setup and breaks above that. I mean, it's off to the races.
Incredible.
So
All right. Fingers crossed that they close tomorrow above 7, let's call it 737. If it does and it holds it for, let's say, till Tuesday, Wednesday of next week, then that's hey, if you want to get into Meta, you better act fast because it's going to start moving up situation, right?
yeah, the relative strength is only 44. It's going to jump up tomorrow, I guarantee you that.
Oh, yeah.
But
Yeah.
and even momentum will the momentum is already positive, but it was down tracing to almost the zero line.
And what's the RSI on Microsoft? It is 70. So what are you expecting there?
Microsoft has been overbought since the beginning of May, and that doesn't seem to be stopping anybody. You still have great accumulation. We're sitting at 1 year all-time highs on accumulation, and it's been overbought since the beginning of May. We have 2 or 3 days where maybe 5 days total where it was down below 70.
Wow, look at this graph here. So Meta came out of the gate really strong. Microsoft wasn't as strong, and they're both ending up at the same literally the same location. They started to kind of track each other, and wow, incredible. So combined, these two companies are $5 trillion in market cap. And tonight, if those prices hold, they're expanding their value by more than $400 billion. All right. Now we're cooking with gas. So let's see if we got some questions out there in the chat. Man, that was awesome. So we've got ex-dividend dad. How you doing, man? We are doing a watch party for Microsoft and Meta, and anything else that comes up. Cream Biggins, good to see you. LRCX, I think Lam Research, they may have announced. We'll see if we've got time there so we can take a look. Hood is going up. Robinhood, did they announce today? Oh man, well, let me note that. I want to stay on the Microsoft Meta talk track. I don't want to give it up just yet. I want to answer questions from the chat specific to Microsoft and Meta. Looking nice on the Robinhood side. All right, good. Ex-dividend dad, Meta, Microsoft, make up more than 16% of your portfolio. Well, sir, you should be in Happyville tonight. Congratulations. In Shadow Guy, we covered the CapEx in detail. Both companies expanded CapEx quite a bit, and the market likes what they're seeing. They're like, hey, you got to spend so you can stay ahead of everybody else or beat everybody else or catch up to everybody else, but CapEx is acceptable now. And then Mike, Qualcomm. So they beat, guidance was up, and you added some to your position. I'll probably add some if all those things are in line. Ex-dividend dad, I think Meta to 900-ish. Nice. Stock split coming. Maybe. And then Carlos, good to see you. Free cash flow and CapEx for Meta. Yeah, we covered that. We covered that on the screen, and I could tell you that the free cash flow did expand, but the CapEx is being spent. So free cash flow for Meta is somewhat flat, but they're spending so much in that data center. That's where the money's going. All right, so we're caught up on comments. Valuations look good for Meta. I think the stock's priced really well. I think it could go up both on fundamentals, and I guess the technicals are setting up well. Microsoft, I'm not as bullish on because I think their price is, again, the market cap's like double Meta. And it's once I put it in my intrinsic value calculation, it shows that, hey, it's priced too high as we stand today, and tomorrow it's going to be priced even higher. Any other thoughts on Microsoft or Meta?
They're pretty spectacular results.
All right. So let's take a look at Robinhood. That came up, and I'm curious to see what's going on with Robinhood. So they announced they're up a little bit, not a whole lot. Okay, so it looks like they reported. Let's see if this is, no, that's going to be CNBC. Okay, so Robinhood's been growing their top line really well. Let me make this bigger. So revenues are up 45%. Nicely done, Robinhood. That is very, very good. They're already becoming a substantial business. So they're $1 billion run rate per quarter. So very good. They're also starting this subscription. If you're a subscriber, you get like better pricing on your trades and all kinds of stuff. And Coinbase is doing the same thing, which is different than, like, let's say a Charles Schwab, but I might be wrong on that. I don't think Charles Schwab offers anything like that. So that's been interesting to see that play out. All right, so high revenue growth, very good. Transaction-based revenues increased 65%. All right. Net income doubled. All right, nicely done. They bought back shares. It's not a good idea right now. You don't buy when your stock is like screaming up. You buy when your stock is low priced, but they did it. They always break the rules. All right, so
I think there's $1 trillion in buyback announcements this year.
from who?
All kinds of them. The total is $1 trillion.
Get the balance sheets have so much cash. They're like, well, where do we go with the cash? Let's buy back shares. Speaking of which, yeah, they got plenty of cash here. We got 14 billion. Yeah, that's a good cash pile. All right, so I want to get to their cash flow.
And the buyback window will start opening back up now that 80% of the companies of the S&P 500 have reported. So you'll start getting some benefit of an additional buyer coming into the market.
So Robinhood created 4.1 billion of cash from operations, and they have almost no capex. So it's almost all free cash. So $4.1 billion of free cash. And I'm going to go over their valuation. Maybe you can get the technicals ready on Robinhood, and then we can jump over to you in a minute. So Robinhood. So right now, I think Robinhood's priced a little too high. They've been on a tear. They've just been going up and up and up. This cash flow number, I'm going to have to move up because they're already up 4 billion. So I'm going to need to work on that. It's probably going to reprice the company, but Robinhood's growing so fast and taking advantage of so many things that the stock is just booming. Over the 1 year, it's up 420%. So it's really moved. It's gone from being a $20 stock to $106 per share. Year to date, it's up 184%. So and they're putting up great numbers, 45% revenue growth. The cash flow looks great. They're taking on markets that can make them even bigger, notably the stablecoin market, providing a wallet for subscribers. They have that subscription model where people become subscribers of Robinhood. They're they're doing a lot of things right. So I'm glad I got this stock. I got it at a great price. It's well over a six bagger for me in less than 2 years. So go Robinhood. I am a fan and I'm an investor. So let's flip over to you and take us through the technicals.
This is a really good looking chart. It's just been pretty much straight up and to the right. Where we saw the divergence earlier in Microsoft, we do not see that here. So the price is going up, but you see those peaks there?
Mm-hmm.
And then it flattened out here at the end. So we're getting a little bit of decrease, but this momentum measurement is higher than this momentum measurement. That looks really good and supportive of this uptrend.
Mm-hmm.
If we do the same thing with this, that is an uptrending relative strength indicator. So we're below 70 at the moment, but the price had leveled out, probably waiting for, let me clear this off, probably waiting, and I'll go back to like 3 months. So it's been pretty much flat, probably going into earnings, which is not uncommon.
Mm-hmm.
So that chart looks really, really good.
Jeez. And you know
Oh,
what's
and look at the accumulation. It just shot off like a
you know,
rocket after almost being flat for 9
yeah.
months.
And the so Robinhood was like so close to being included in the S&P, but it wasn't. Soon it's going to be included because
It,
they've gotten bigger than some of the S&P companies near the bottom.
yep,
So they're going to be included. And once that happens, that's kind of an artificial bump in the
yep,
stock.
exactly. They'll do well. Yeah, it's a great looking chart.
So Robinhood is down as I speak, just slightly in the after hours. No, it's green, but it's flat. Now, to me, that's a little bit of the market wasn't impressed because you're seeing Meta and Microsoft just take off. And Robinhood, if anything, ought to be keeping up with those guys. They put up some really good numbers. So, what is the problem with Robinhood?
I kind of
See,
think that Microsoft and Meta are going to be exceptions to the rule. Google didn't shoot up 10%. Um, there's a few
yeah, on
other,
their earnings, yeah.
yeah, there's a few other companies that if they reported good numbers, the price kind of stayed the same. If they missed numbers, they were punished severely. So I
Mm-hmm.
think Microsoft and Meta, if they can hold these prices tomorrow, I think there are going to be a couple exceptions to the rule for the
Incredible.
environment we're working in right now.
Yeah, Robinhood, this one is surprising to me that it's not rallying in the after hours. But, we'll see where it trades tomorrow. I'm feeling like if it's not getting bought up tonight, it's going to sell off tomorrow. And, when a stock goes up 400% in 1 year and it comes down 5%, let's say tomorrow, it's like, all right, no big deal. It's up 400%. So now it's only up 395%. Okay, no
Right.
problem. We'll see where it trades. Well, we've got a long list of stocks. Maybe we can move on and talk about Qualcomm. Qualcomm's down 5%. in the after hours. It looks like they announced they were not as enthusiastic as the market would have liked. They wanted them to tell them that, hey, we're gonna really blow out the numbers. So let's see what we've got in their earnings. Do you have their technicals up?
Yeah,
You want to go over that?
sure. So they're trading below where they were August of last year. They have not got back to their highs from October of last year and February of this year. They sold off in March, just like most other companies, and then took the big hit in April. They have been pretty volatile on their uptrend back to the 159 where they were sitting at the close today. They never got to an overbought condition. They're sitting at 53.96 for the RSI. The accumulation's pretty much been flat and was actually down for this latter half of June and the first half of July. Started increasing a little bit, but is decreasing again this past week. They've had a few days where the volume was trading pretty high, but for the most part, they're trading right around their 50-day average volume. They are positive on the PPO. They are positive on RSI. But it's just been a slow, volatile grind since April.
All right. So
one other thing that's kind of interesting is you'll notice this 50-day, let me zoom up here a little bit. The blue line is the 50-day moving average, and the red line is the 200-day moving average. So one of the things that I'll be watching for is for this 50-day moving average to cross above that 200-day. If it does, then it confirms that you're in an uptrend from a technical point of view. If it fails and starts turning over, then something is amiss. But if it can break through that, then that's actually pretty good news. That'll be something to keep an eye on.
Okay, so
you can see when they broke down, when the 50-day crossed below the 200-day, that was just kind of a sign of a big sell-off. But now that it's curled back up and getting ready to cross back above that, that'll be confirmation that we're back in an uptrend.
Okay. All right, so let me show their actual earnings announcement, and then I'll go through my evaluation of Qualcomm. We're talking about Qualcomm. They announced earnings, stock under pressure, and they're announcing the guidance for Q4 fiscal year 25. They're going to do 10.3 to 11.1 billion. I'll compare that to the quarter that it's being compared against in a minute. And actually, I could probably do that real quick. So that quarter is going to compare to this quarter. Sorry, not looking at the right thing. It's going to compare to 11.2 billion. So when we look at this number, it's either going to be very small revenue growth to 10% revenue growth, which is underwhelming. If you look at their revenue growth for the year, or I should say for the quarter, revenues expanded by 10%, profits expanded at a greater rate. That looks good. So they're guiding that they're only going to grow like less than 1%, as good, maybe as good as 10% growth. So I think that's what the market's like, whoa, what happened? Like, how come you're not growing? Now, these guys, they make their money on phones, right? A lot of their chips are in phones, and they make their money now on PCs to some extent. They make their money on military. And one thing that hasn't really been talked about, or at least, I don't recognize that it's super popular, is Internet of Things. But now they're dealing with physical AI, this may become a little bit of a hotter area, because if you got, self-driving cars out there, you got to know where they're at. They have to self-report. If you got drones flying around, they got to self-report. And Qualcomm does know how to do wireless everything, wireless phones, wireless tracking systems, for the military. It's big for the military. They're also in automotive, which is, I don't know if it's great. Automotive is not doing great. So, and they're buying back shares. Oh, okay. Join the club. All right. So revenue for the quarter was good, but the guidance was bad. Let's see if they give us a couple of financials in here. They got plenty of cash. They have a good balance sheet. And revenues, we just went over their growth. They finished their third quarter for their current fiscal year. And this is for 9 months free cash flow. And their cash expanded from operations by roughly 5 million. That is call it a 5% growth, and X is identical to last year for the first 9 months. So they did expand cash flows by 5%. This is the valuation of Qualcomm before I update based on that earnings. And something's going on here. The stock price is not updating. Why isn't it updating? There we go. All right, so having a little bit of a Google Sheets issue. It's not updating my stock price. 966.
Can you enter it manually temporarily?
Yeah, I can do that.
It closed at 159.06.
Really? 159?
No. Yeah, Qualcomm, right?
Yeah.
Yeah, 159.06.
Okay.
There you go.
So their cash flows are really strong. I was expecting them to grow by 8%. That isn't happening. And this stock has not rallied with the rest of semiconductor. And it's a good value stock that is growing revenues. So I thought it'd be a good pickup. It's in my portfolio. And I'm doing okay with it. It also pays a nice dividend, by the way. For income investors, Qualcomm pays a 2.2% dividend. It's not setting any records, but you're in semiconductor and you're getting paid a dividend. Year to date, it's 3.5. It gave you an opportunity to buy. I think you commented on this uptrend. So it's kind of on the right track, but not keeping up with NVIDIA. So Qualcomm is not exciting to watch. It's down in the aftermarkets. I'm gonna have to study up their financials and see if it's gonna. I'm gonna have to rethink this stock, but I think it is discounted. I think this is going to be a good long-term winner. I think it has a really good place in the market, where it provides a lot of the wireless chips, and that's never going to go away. It's just going to continue to grow. So that's my valuation on Qualcomm. I'm going to go ahead and let that error out so it reminds me to go fix it later.
Yeah.
All right, so Qualcomm not having a good night. All right, let me look at Microsoft and Meta again. It's like the present under the tree. You see it down there. You can't open it till the morning.
Yep.
But boy, that box is looking pretty big. Wonder what mom and dad got me. All right, what's the next one you want to look at?
We don't really have to spend a whole lot of time looking at them, but the ones that I had reporting was Prudential. They had an implied move of 6%. Couple real estate investment trusts. And Q2 is a small cap software company.
Q2, huh?
Yep.
Okay.
So if we look at, see if I can find Q2.
I've never heard of Q2. Is that
They're pretty small, but they're they write financial software for small regional banks and um, credit unions.
mm-hmm. Okay.
So yeah, they beat by 8 and they beat on the revenue, but it's a very small company.
Well, I love software companies. I've got my professional career has been mainly on software. So
Yeah, let's look at the
stuff
chart.
I can talk about software. I can roll out of bed and talk about software.
Yeah, looks a lot like Qualcomm at the moment.
Their
So they
revenue growth is good, 13%.
they haven't got back to their all-time highs back in December,
Mm-hmm.
112, but they were cut in half basically by April 7th, and they've recovered back to 89.99 at the close. They've been pretty much trading sideways. I have an intrinsic value on them at about 105.
Mm-hmm. So they have a modest discount on the stock as
Yeah,
we
they do to me, yes.
mm-hmm.
They have really good accumulation. It's flattened out a little bit here lately. They're right in the middle on RSI, slightly below the midpoint, and they've been positive on PPO since the middle of May, and now
Mm-hmm.
they're looks like they're getting well. They have crossed over into negative territory. So I don't know what's going to happen with this one because it's been pretty flat for the last 2 or 3 months. If we go back a couple years, it was really growing quite rapidly.
Yeah. Yeah, I like their revenue growth. What I don't like is their margins aren't really good. They have gross margins of 52%. And if you're in the software business and they are a $5 billion, no, they're $720 million in revenue. So that number could improve, but it'd be important to see them maybe get to 70% gross margins, growing to 80%, because software companies, they become desirable because of those margins. And right now, these guys are at 51.79, and their operating margin, they lose money, and the profit margin, they lose money there. They do have good free cash flow, so that looks good. So if they can keep growing and expand that margin, I think they can become valuable. They also have a niche, right? They're selling into banks, and their addressable market will be limited to just banking. They can't let, oh, we're going to take our solution and sell it to wholesale distribution or engineering construction firms. No, it just works for financial for banks.
I have accounts at 3 different credit unions. One was for a loan that's been closed out. I have another one for a credit union that I've been a member of for 40 years. And then I have a local credit union if I have to handle cash more than I can do online at a time.
Mm-hmm.
And I have a local credit union here. If you log into any one of those 3 credit unions, the software looks identical.
Yeah.
Except for the banners and a few things around the edges. Other than that, you can't tell without looking at the name at the top which one you're logged into.
Mm-hmm.
So it's company like Q2 that is probably providing their packages for their online banking.
Yep. Very good.
Although when I
So,
log in, I don't have any specific way to know that it's Q2. I've looked, but I haven't found anything specifically.
so somebody asked about Lam Research on the chat. So let's take a look at that. They announced. Let me share my screen. So Lam Research is having a good year. Year to date, they're up 37%. In the after hours, this stock's up 1.6%. And they are pretty much benefiting from the high growth of semiconductor, because Lam Research doesn't produce chips. They create the materials and machinery that then the semiconductor foundries use to produce chips. And so they're kind of a supplier into that ecosystem, and that's what they do. Looks like, let's see if they've already loaded the financial. Nope, they haven't. But this is a $126 billion market cap company. I did own this stock. I was able to buy it at a good price because it has this volatility. And I sold the stock and made some money, but it looks like it's continued to go up. Congratulations to those that own it. I think they're modestly discounted, and I wanted to, sell it off at a profit just to reduce my exposure to semiconductor, which may have been a bad move because semiconductor is doing great. But I still own 2 semiconductor companies, so I'm going to handle those. I'll show my valuation on Lam Research. Geez, what's going on with my stock price lookups?
Yeah, they do that every once in a while, Victor. They just kind of hiccup and don't work for a few hours.
All right, well, kind of have to move on. I don't want to go through a bunch of Google Sheet troubleshooting. But these guys here, from memory, they're discounted at a fair amount, like 20% discount last time I checked. So they're a good stock. They're a good stock to own. Small dividend. I just wanted to have greater exposure to upside, and I bought a lab. I've owned a lab, and then I own Qualcomm. So Lam. All right, so let's check the list of earnings. So we have Microsoft, check. That one did well. Meta, check. Killed it. ARM Holdings. This one's a kind of big one, right? Let's take a look at that one. We just talked about Lam Research. It's up 2%. ADP announced this morning. Altria. Do you own Altria?
I do.
You do? Well, let's take a peek at that. It announced before the market opened.
Yep.
And then Carvana. I got CNBC running in the background. I could have sworn I saw like Carvana's up 16%. Okay, I own Allstate. Let's take a peek at that. Public Storage, a REIT. Ford announced. Do you own Ford?
I do not.
Okay. And did you want to cover VICI?
Yeah, we can just take a quick look at it.
Cover VICI. And let's cut it off there. Oh, you know what? Grab. Let's cover Grab because it's come up so many times on the live stream.
Okay.
Let's see what's going on with that one. All right. And I think that's enough to work with for now. So ARM Holdings down 8%. And the way these guys make money is they actually partner with companies and enable them to design their chipsets, right? They think about the workload, they think about how you're going to, what kind of computer you're going to need, and then they design that chip, and then they benefit from that chip either being sold or consumed, and that's how they make money. So it's a different way. It's almost like fabless semiconductors companies decided we don't want to build foundries, get rid of that. Arm Holdings is like, well, why do you want to hire like 100 engineers? Use our capacity, design your chips, and then we will co-benefit from you selling those chips. Then you don't have to have 100 engineers involved. So the concept was well received. They do produce revenue, but boy, they're having a tough time. They don't have their earnings loaded there. So it looks like they changed their strategy to some extent. And let's see if this tells us anything. No, it just tells us that there was an announcement. So this is a little bit of a surprise, but we'll see. I'm not an ARM investor. Are you an investor in ARM?
Nope.
Okay. Well, we'll see how they do. I'm just going to kind of fly by this one. We don't have to dive into it. Altria, this is one of your stocks, and this one for the 1 year up nicely year to date, and you get that nice that nice cash flow in the dividend. So that's looking good. They announced stock was under a little bit of pressure during the day, but a lot of stocks today were under pressure. It was a down day. What are your thoughts on Altria?
They were actually up they closed up 2.14% today. Oh, excuse me, 3.61% today.
Right.
So it was a little bit of a jump.
Yeah, that was good.
Yeah, this one's been under a lot of pressure just because smoking is going down, and they had some problems with the smokeless stuff. But that does seem to be resolving itself a little bit, because it's been, over the past year, it's really ramped up. I think I'm in at a lot less than that. I think, yeah, I'm in at 43. So that's not even on this chart here.
Good.
Yeah, they've had really good PPO. Did have a crossover here for a short, brief time, but we're back in positive territory. Accumulation has just been straight up over the past year. So I hold this for income. It's I don't expect it to do a double or a triple or anything like that, or cure any diseases. Probably create some, but has good income.
You're not expecting it, but you'll take it, right?
Yeah.
Good for you.
Yeah.
That looks like a winning investment there. Good deal. All right, let's move on to Carvana. Yeah, it's up 16%. All right, Carvana. Up 16% in the after hours. This one here, I mean, investors that invested down here did really well, right? You invested way at $9 a share. Now you're at $333 a share. Nicely done. And it looked like it may go bankrupt down here. So you had to really have some insight, some internal fortitude, and then watch the stock go up. 16% gain. Now this one's a little bit of a meme stock, in my opinion. I like the Carvana business. I think it's neat what they do. The whole vending machine kind of, you put cars in it. I think that's pretty neat. But the PE is 112 for a car retailer. It's expensive. When we look at their financials, they are growing, which is good. They're 14.8. But once we get into margins, this is where that's pretty good margins, 21.6 for a car business. but great margins is like 80%, 90%. And these guys will never be that. And it's a competitive market, used car sales. You have Carvana, you have other businesses dedicated to used car sales like CarMax, and then you have regular dealerships that are also trying to retail used cars. So it's just a lot of competition, and not my favorite business. Retail cars, it's it's just not very profitable. So, but this stock's really moving up. Free cash flow is 950 million, and there's 71 billion. Yeah, the best I could do is probably value these guys at like 20 billion, maybe 30, stretching it, but not 72. I think this thing has become kind of a little bit of a meme stock and just jumped up really high. Their earnings announcement, I don't know what they're announcing. So they have a record-breaking second quarter. What's interesting is I looked at Harley Davidson earlier today, and Harley Davidson, their sales are down 24%. It's just really tough to sell motorcycles right now. And Harley Davidson only sells new motorcycles. But that's kind of maybe a sign of, the car industry, which is, who's buying a car right now? And cars keep getting, their useful life keeps getting longer. So I don't know. I've just never been a big fan of the car retail business like Carvana's. Your thoughts on Carvana?
I don't really have any thoughts on it. It seems like a meme stock to me as well.
Yeah.
Although a lot of people today don't buy cars like my generation where we went and looked at them and drove them around. And some people are quite comfortable just pulling the tab on the vending machine and having it delivered to them. That's just beyond my comprehension, but people are
Well,
doing it.
well, here's what I've heard from a good number of people. I don't want to buy a car. I don't want to
Yep,
pay insurance,
exactly.
especially in densely populated areas, right? Los Angeles, New York. I mean, in New York, it's such a luxury to own a car. And I had a friend that moved to Chicago, and they don't use their cars in Chicago. And it's a kind of a funny story. So he would take, the mass transit. I guess they
Yep,
call it the L there.
yep.
So he parked his car on the streets, and the car didn't have any way of telling him where the car was. It's not like today's cars. And he lost his car, and
Oh
he spent
no.
2 weeks going, "Where the heck did I park this thing?" He couldn't find it. He couldn't find it. He called the police department and said, "Hey, I think my car was stolen." And they're like, "Okay, so you sure?" And he's like, "No, I'm not sure, but I'm pretty sure it's stolen." They go, "No, you got to be sure." So he finally found it. He's like, "Geez," because he wasn't driving his car. He would drive it literally just so that it wouldn't, like, the battery wouldn't go dead and so forth. So that's another comment on cars is the next generation with, robo taxi and Uber being so darn convenient. Like when I travel, rarely do I rent a car. It just doesn't happen anymore. It's just far better for me to take Uber. That's kind of reducing the number of cars I need. So we'll see how that plays out. Moving along, Allstate. Allstate's a stock that I own. They announced, and they're up a little bit. This is a pretty steady Eddie stock. It's not going to break any records, but I do like, it is a dividend stock. It's goes in my lower risk pile, nice Dow based, stock. And looking back, it's been a good stock. I've owned it. It's done well, paid a nice little dividend, and it keeps doing what it's supposed to do. Figuring out the best way to sell insurance, covering the risk right. And one of the things they did do that was smart is they pulled a lot out of California, and then we had those fires.
Yep.
So Allstate was like, "Whoa, we dodged a bullet on that one." I live in California, so I'm not rooting for any fires, but I'm just kind of pointing out, hey, Allstate kind of called that one right. All right, so I'll analyze this one a little more tomorrow. Did you want to talk about or show anything on Allstate?
That's not one that I own. I can pull it up real quick and just see if there's anything exciting.
Sure. It looks like Mike wants to look at Adobe, so we'll look at Adobe at some point.
Yeah, it does have negative PPO and negative RSI, but it's been under good accumulation. Looks like it's been pretty much trading sideways, so nothing too terribly exciting. I have a few like that in the insurance space as well.
Yeah. I like stocks where they just don't make any noise like Kroger.
Yeah.
And then when I look at it like 2 years later and it's gone up 40%, you're like, okay, good job. And it paid me a dividend. So because I have some stocks that create a lot of noise, like Robinhood or A Lab, or I own a little bit of Nova Nordisk, and boy, that thing has been shot down out of the sky, and it's kind of crashing and burning. You want to talk about VICI? You kind of show technicals, and then I'll kind of talk about it a little bit.
Yeah, we can look at it real quick. We can look at Adobe if you want to first.
Sure. Where do you want to go?
So I'm looking at the chart now. This is like a chart that's hoping to do something, but doesn't look like it's done anything. You got a downtrending 200-day moving average. I usually try to stay away from those. Downtrending 50-day, it has turned up a little bit, but then is turned down again. Negative momentum, negative and decreasing relative strength, and the accumulation looks terrible. That tells me that people are moving out of it.
Huh. And
So
their
that would be from a
37.
technical point of view, this would be a stay away from me. Then VICI, that's not too terribly exciting. This is an income investment for me.
Mm-hmm.
They did they missed on earnings or FFO and beat on total income, I think, is what I read a little bit earlier. But they've done pretty well. I've got a price. I'm down here at about 28.5. So I'm doing pretty well with VICI. It's a pretty sizable holding for me.
Yeah, VICI. Are you a little nervous that like these gambling towns, Las Vegas, and because they own properties that are casino based,
Yeah.
is the tourism decreasing in those areas, or what's your sense of the economy for those types of leisure?
I hear they're down a little bit, but they had 100% rent collection even when we shut down the economy and there were 0 visitors. So these big casinos, it would have to be a long drawn out problem, I think, before they stop paying rent on those, billion-dollar properties that they have. So
Yeah.
I'm not too terribly concerned about that.
And then kind of talking about Adobe just briefly. So I think Adobe's just like there's a big move obviously into semiconductor and building out AI. And that's just taking so much of the capital that it's leaving companies like Adobe kind of just floundering. It's just not going anywhere. But the business is strong, growing at 10%. Margins are really, really big, 89% margins. Free cash flow is almost 10 billion. They're growing their free cash flow. I mean, fundamentally, this is a good business. From is their software good? They're the number one. They're number one in the creative space. But the market's going to do what the market's going to do. Right now, the market's like, hey, we just care about the data center. Look at Microsoft and Meta. They spent a ton of money in their data center. We're going to throw a bunch of new investment into those guys. Adobe, you guys are software. We're not interested. So nobody's buying it. RSI is super low. I wonder at what point will this stock ever come back? I think it will because there's just too much value here. And I don't think AI is going to replace these guys. I think AI can do certain things, but when you go to creative, capacities like creative tasks, you're not going to have a machine render a picture or something. You're going to have a human that can really make sure that that photo or that video and so forth really is perfect or really is applicable. I can see a lot of things going wrong. I've used a lot of the AI apps to create pictures and stuff, and maybe 1 out of 20 comes out pretty good, but like 10 out of 20 are terrible, and then the other ones are just okay, and I rarely ever use them. So we'll see if Adobe, when they will have a comeback. But what Adobe's faced, Salesforce is faced with, their stock isn't going anywhere. And we'll see if it ever does. All right, so Grab is the Uber in Asia. They also do like Uber food delivery, and they are owned partially by Uber, by the way. And looks like their stock, they announced, but their stock isn't really moving. I'm not an investor in Grab, although I own Uber, a lot of it. So I kind of own some Grab through my Uber shares. But this one's not really moving a whole lot. Year to date, it's up 12%. 1 year, it's up 59%. Nice. 5 year, it's really sold off. So Grab, this one gets a lot of attention on live streams. I often get asked about Grab and look into it. So we talked about Lam Research. Prudential up 2.68 in after hours. Did they announce after the market closed or before?
Yes.
Looks good.
It was after.
Nice dividend at 5.3%. Nice. Year to date, down 14%, down 18%. Interesting. And what are your thoughts on Prudential?
It's a pretty steady dividend payer, and price kind of fluctuates between 100 to 122 over any given year. So I'm below. Let's see where I'm at. I'm at 97. So I just hold those and let them pay me dividends every quarter.
Sounds good.
At some point, I'll be less reliant on income and we'll move back to more growth. But this is just a steady dividend payer.
Very good. All right, so let's take a look at Robinhood. Is kind of in the after hours is going up a little bit. That's good to see. I was a little worried that, hey, we're going to probably see a sell-off tomorrow. I have a lot invested in Robinhood. So 1.7 looks good. Meta still up 9.3. I imagine their earnings call is over. Very good. So this is my biggest investment right here. So if it does 9% tomorrow, I will be a happy camper. And then Microsoft holding that really nice gain. Man, Microsoft and Meta delivered. It's like, that Super Bowl that you want to watch and you're like, oh, these two games. I mean, these two teams, hopefully it's a good game. Well, it was a very good earnings. So what are your thoughts about tomorrow's big names? Amazon and Apple. What are your thoughts there?
Apple, I actually sold out of back in January at the all-time highs because I think they're going to struggle for a little while.
Yeah, that was genius. Good
Yeah,
job.
I actually close, and I love Apple products. Everything on my desk here is Apple. So I love Apple products. Been a customer for a long time. But I'm just worried about, let me put it this way. There are better things to invest in at this point.
Well, I totally agree. And I've done several videos really saying that, Apple has got no strategy, no growth strategy.
Yeah.
They're milking the iPhone way too long. And I've seen this movie before.
Yeah.
This movie ends terribly for investors. That iPhone, it's, you guys got a lot of mileage out of it. It was worth a lot, but I switched from Apple to Samsung, and my Samsung device, and so I used to have a Samsung, and then my family liked Apple. My wife really liked Apple. So, all right, I'm going to switch over, take one for the team. It kind of felt like I was giving up processing, ability. And I thought the Samsung had some features that were better. And finally, I switched back. I'm like, okay, Apple, I'm going back to Samsung. And I'm so glad I did. This thing, believe it or not, it's optimized for AI, has a little GPU in it. It's integrated into its chips. So Samsung thought far ahead enough to say, well, we're going to optimize this device for AI. So the AI in this thing is pretty damn slick. The whole device is better than the Apple phone that I left. And I think Apple's brand drives kind of like the feeling you have, which is people feel good about it, trust it, and so forth. But from a technical perspective, Samsung's just a better device.
Yeah.
And there's other competitors. You have Xiaomi, Huawei, and you have Google themselves through the Pixel, right? I mean, the market's competitive out there. So for Apple just to stay on one product is such a risky strategy. You see the other businesses like Microsoft tonight. Microsoft has all these different businesses, and they keep acquiring businesses that make them more diversified and stronger. So Microsoft may have one business struggling and the other businesses are doing well. Well, they're going to do well. Apple, if the iPhone struggles, they're done.
Yeah.
You are done. So I've been kind of cautious about Apple for a while, and it's beginning to show that, you know what, the market is feeling the same way. When we look at Apple, the RSI is at 48. And I would say for about 2 years, here's what I would hear investors say about Apple. Oh, they're going to figure it out. Remember hearing that?
Yep.
Oh, they don't have a strategy around this. Oh, Apple's smart. They're going to figure it out. 2 years later, I haven't seen any figuring out yet. so, so I think times are going to get really tough for Apple, in my opinion. Here's a bold statement. I think they're going to head toward $1 trillion market cap over the next 5 years. And it's going to be a tough, painful path for investors. I don't know that they have, like, you see what Meta's doing, how much capital they're putting into AI. I
Yep.
mean, they are betting big, just getting after it. You see none of that with Apple. What's the next big product, Apple? What's your next iPhone product? What's your next big idea? Don't have one. Well, Meta's, their next big idea is AI, and they already have all these great, social apps. Google, they have Robotaxi. That's doing really well with Waymo, as well as their cloud business. Microsoft, AI. They're beating the drum on AI, doing really well with there. Amazon's got a bunch of new businesses that look great. Here's it. So let's switch over from Apple. Apple, I think, is going to struggle in the future. I'm going to start the Amazon conversation by saying something that oftentimes Amazon is doing great things, but they don't toot their horn. They're not like broadcasting it out to everybody saying, oh, look how great we are. But here's something great that I heard about them, and I wanted to call it out. So Amazon, about 2 weeks ago, deployed their 1 millionth robot in their operations.
Yep, I heard
They've,
that.
they've been operating robots for years. Now everybody's talking about, oh, robots this and robots that. And Tesla's going to create these robots that are going to do these great things. And this Chinese company is going to do robots that can do all these. Well, Amazon, yeah, we have robots and they've been doing these things. We don't have to make up use cases. Come to our warehouse, which we're not going to allow everybody to see and steal our ideas. But let's say you want to be you're non-threatening to Amazon, you want to buy their technology, because that's how AWS was born. Amazon had a great infrastructure capability, and they go, hey,
Yep.
we could probably sell this for customers. That became the most valuable business at Amazon. Well, if their robot business is really successful, maybe they could start selling their robot capabilities to customers like Ford, like whoever has a warehouse is managing inventory. You can buy some of these optimal systems from Amazon that include robots. So starting with that, Amazon's just loaded with really good products. Their cloud business is growing. I'm a shareholder. I think very highly of the company. I think it's fairly priced. The stock is fairly priced. Looking forward to the earnings. I am a little concerned that their e-commerce business may lag in the second quarter, but their cloud business is going to do great. I mean, you saw what Microsoft showed for their Azure business. AWS is going to be fine. So, your thoughts on Amazon?
I like Amazon. I'm an investor. They peaked out in early February at 242, so they haven't quite made it back
Mm-hmm.
to there yet, but they are trading above their 20, 50, and 200 days, which are all upward sloping. We did get that 50-day cross above the 200-day at the beginning of July, so that kind of confirms that we're in an uptrend here.
Mm-hmm.
Um, PPO looks really good. RSI isn't overbought, sitting at about 62 right now. And look at the accumulation line, just straight up
Wow,
and to the right.
beauty.
So I feel really good about Amazon.
Yeah, I agree. And one thing, kind of like high level, Amazon and Alphabet, Google have not kept up with the other big caps. And what that means to me is there's some upside there. It's not overvalued. Like Nvidia, I mean, I don't want to argue with anybody, but that's just priced too high. They're super hot. I got it. But they're priced for a business that's sustainable for the next 10 years. And I just don't think they can sell those GPUs for the next 10 years. That's my opinion. But I think Amazon has upside because rational investors are going to be all over the stock. They're going to be like, geez, these guys are loaded with great ideas. They're dominant in e-commerce. They're the number one player in cloud. They even have a robo-taxi business, Zoox, and it's operational in Las Vegas. And I was in Austin, Texas 2, 3 weeks ago, and they got Waymos everywhere there. And I saw a different type of vehicle that had a different equipment, you know, uh, on the roof. And I looked over there. I'm like, what is that? It was a Zoox from Amazon. So
Oh,
they're
interesting.
expanding. And again, Amazon doesn't beat its chest, and promise like all these great things. They go do it. The next thing you know, boom, they've got this great business. So I think they're just loaded. Then they have their streaming business. It's like business after business that you're like, these guys know how to make money. And I'm glad I'm a shareholder.
Yeah, and they provide a lot of opportunities to step in. I mean, they're a little bit volatile, but you can
Hmm.
buy on these dips and get some pretty
Definitely.
good prices that are going to work out for you in the long run, I think.
Yeah, I mean, Amazon's going to keep rising from here, I expect. And I think we're going to think back at these prices and go, man, that was a great time to buy. But
Yeah.
welcome to stock investing. It's
Yep.
about what you think is going to happen in the future versus what happened in the past.
I was picking up shares in April.
Nicely done. All right. Well, this was an awesome stream. Thanks so much, Daryl, for joining me.
Thank you.
Yeah, and I mean, we got another day like this tomorrow. Let me take a peek and see if what are the futures telling us. So Microsoft's a $4 trillion market cap company now. So what about the pre-market? So NASDAQ up 0.89. Okay, that looks good. Oil too. That's good. It's hitting 70. That's good for Chevron. So I think we're going to have an up day tomorrow. That's kind of the way that I'm seeing it. But tomorrow night, I think at Apple, there's a lot of pressure on Apple. They're going to have to come out with a solid earnings, or you know what's going to happen is the message that they need to replace their CEO is going to get louder. If they can't have an impressive strategy, they're going to replace their CEO. There's no way around it.
Yeah, he's a good operations guy. There's no doubt about his operational capabilities.
They're
But
a tech company.
Yeah, this AI has definitely been a miss for them.
Totally. Absolutely. So,
and they are really showing some weakness into the earnings here. The last couple days, they are down.
And you know who they're taking
214
with
to
them?
209.
They're taking Berkshire Hathaway down with them.
Yeah.
And I love Warren Buffett. Okay, no disrespect, but Warren Buffett unloaded some Apple stock last year, and I thought he's going to keep unloading it because it's like I don't think it takes a rocket scientist to figure out the Apple business is really at risk. It's and if you have a couple big investors leave, I think the exit doors are going to be pretty crowded.
Yep.
All right, sir. Well, have a good night.
You do too, Victor, and everybody that joined. Thank you for stopping by. Appreciate it.
All right. We'll see you guys. Good luck.
All right. Take care.